After this video, you will know where the market is heading to and what's the direction of the market by identifying the order flow. I'll give you an easy guide to identify bullish and bearish order flow. This video is so important to understand the market and apply it on any strategy, and it's going to give you a higher win rate. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into it. So taking a look at the bullish order flow. So in this diagram, this is how the bullish order flow looks like. Now, this is the textbook example. It's going to be harder when it comes to the live examples, and the live market is going to be much harder to identify. It's not going to be as easy as this. However, this is how it looks in general, especially in the higher time frame. In the lower time frame, there would be a lot of internal structure inside and a lot of fair value gap disrespected and other stuff. However, we look at the extreme fair value gaps and extreme structure, this is how we want to see it. Now remember, we are focusing on extreme. For example, I'm focusing on a fair value gap or order block here. I'm not really counting on a fair value gap right here. Or if there is a fair value gap in the middle of the structure or at the 50%, below 50%, slightly above 50%, this is not going to make a big change or a big difference for me, or it's not going to indicate something big for me. However, if an order block right here is disrespected, this is where I'll be thinking twice. Okay, this is a major disrespect here. Now, in the structure, we can see that price was going down. An order flow to the upside is created. What do I want to see in a bullish order flow? First of all, I want to see multiple breaker structure to the upside. So we can see that this high was created. Price was traded internally here. And then a breaker structure of price takes the high. Keep going up with displacement. This is one of the signs of a bullish order flow. What is another thing? Another thing of a bullish order flow is price retracing down into bullish PD arrays going up. This is another thing. So we can see that we had this bullish order block right here. Price came back to it. But what happened while price is coming down? This level was swept. So that's another thing. So price is sweeping a short-term low, which was created here. And this low is created as price going down to engineer some liquidity. So price retraces down, started going up, created some liquidity here. Usually in a bullish order flow, price will create lows that is taken later into PD arrays, bullish ones, then going up and a breaker structure. The same thing, we can see the price came down here, created this low, went up. Now price is engineering liquidity, and it's a sell side liquidity that is taken later. This is a short-term low, taken into a PD array, a fair value gap in this case, going up, creating a breaker structure. That's how I want the bullish order flow to be. And we can see that we had this bearish PD array that is disrespected. So even right here, if there is a bearish fair value gap right here and it is disrespected, that means we are more in a bullish order flow. The same thing here. If we had a fair value gap here or a fair value gap here and it is disrespected, that means we are in a bullish order flow. So in a bullish order flow, I want to see bullish PD arrays respected, bearish PD arrays disrespected in general. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as 0, low commission, and you can trade all markets including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. Now to summarize this and to make it clear as a checklist, in a bullish order flow, what I want to see is price retraces into bullish PD arrays and respect them going higher. So price will retraces down into PD arrays and is going to shoot higher. Another one is price violating bearish PD arrays, and price also retraces down to engineer liquidity, and they're going to be as short-term lows, and those short-term lows will be swept and price will reject higher. And last thing, price will be creating clear breaker structure with displacement. When it comes to seeing the difference between liquidity sweep and a breaker structure, displacement is the key. Now, the same thing on a bearish order flow. What I want to see, we can see simply that there is this bullish PD array. Price was going up, then started to come lower, went up. Maybe there is a PD array here that was respected. Price went up, created a short-term high going lower, maybe also respecting a PD array here. But then we can see that there was a sweep of the short-term high that was created. It's the fuel of the market into an order block. And price simply went lower with displacement, breaking structure. This is the first sign of reversing, and this is the first sign of order flow changing. What happened after the break of structure, and we all know that we expect a retracement. You can see that price went up, also created that inducement or short-term high, started going lower, taking that short-term high, which was created into a fair value gap. We can see that the first bullish period array is respected. The second one is respected. Now I would know for sure that I'm in a bearish order flow. We can see price coming lower, displacing below this point and this one. This was my range from this high to this low, and we had a breaker structure. This breaker structure was with displacement that also broke this bullish order block, which means that what I'm seeing here is price respecting bearish PD arrays and disrespecting and violating bullish PD arrays. That is a bearish order flow. So to summarize the bearish order flow, price will retrace into bearish PD arrays and respect them going lower. Price will also violate bullish PD arrays. Price will be retracing up only to engineer liquidity, which are going to be a short-term highs. That is going to be taken later. And price will sweep those short-term high and reject lower. And finally, price will be creating clear breaker structure with displacement to the downside. Now, all of what we discussed, without examples, it's not going to be clear. It's not going to be that applicable. We need to go over examples to understand the whole picture. Okay? So we can simply apply this in any time frame because time is fractal. Any time frame, you can look for a specific month. You can look for a specific week, a specific day. Like if you want to identify the order flow in a specific day, you can do that. In this example, we're looking at the 3 minutes euro dollar. We're looking at 7 a.m. here to 10 a.m., which is simply the New York kill zone. So I want to see how does the order flow look in this session right here and how did it start. So starting from here, price simply started by a big candle. So this is the first candle in the New York kill zone. Big candle. Price retraces down. There is a small fair value gap here. Price went up. Another small fair value gap that is also somehow respected into this order block. Started going up. The real move started here. So we had nice displacement going up, created this high. Price started going lower. We had this fair value gap. Price simply come to the fair value gap here first. Could not displace up. What do we expect when price come into a fair value gap, go up, could not displace above the healing range or above the last high? We expect this low in a fair value gap to be swept and then the breaker structure happening. That's what happened here. Why? Because simply what is happening here is price going up and telling you that there is no fuel in the market. When it gets here and then started going lower, where is the fuel of the market? It's this one. It's the low in a fair value gap. Price basically sweeps this, and we can see how price is respecting the 50% of the fair value gap all the way here, and then started displacing above. Breaking structure here, which is closing above the high of this candle, going up. Now I would know that I'm in a bullish order flow. Why? Because simply prices started going up. This fair value gap is respected, and we have a breaker structure. What do we always expect after a breaker structure? We expect price to come to the discount zone and push higher. That's what happened here. So price going up. We have the range from here to here. This fair value gap is on premium. This fair value gap is on discount. Price simply, before going up, came all the way here, sweeping this liquidity right here into the fair value gap, and then started pushing higher. No clear breaker structure here unless you want to consider this high. And here's the breaker structure. Price went up. No fair value gap in this case. When there is no fair value gap, where does price goes to before going higher? If there is no fair value gap, it goes to short-term lows. So if you can see here, we have this low. If it was partially filled into this fair value gap, I would expect price to come again, sweep this low. However, this one fills the fair value gap fully. Started going up. I don't see any fair value gap here, but I see this clear low. What happened is price comes again here, created equal lows, which means that I'll be looking for those lows to be taken to push higher. That's what happened here. Price simply came lower. This is the fuel of the market. It's right here and right here. Price came down, sweeps, not with a wick, but with a body. Then there is an inside candle, then a breakout to the upside. This candle right here disrespected the fair value gap, the bearish one. You see right here, bearish fair value gap disrespected, price going up, creating a bullish fair value gap right here. Price going up. This one right here is not a good breakout structure. It's just with a wick, so I'm not considering this as a breakout structure. Price came lower into the bullish fair value gap. So now I'm expecting this bullish fair value gap to hold for price to go up, breaking this high, as my breakout structure is going to be this high now. But the New York kill zone is done, but we can see that it was a clear bullish order flow. And if we apply all of the criteria or all of the points that I mentioned before, all of those are going to be applied here, and we can see that it's simply a clear bullish order flow. Another example is right here. So this is NASDAQ. This is NAS 100. So what do we see here is price simply going lower in this session right here. Price is simply going lower. You can see this fair value gap is being respected right here. The price started pulling up into the fair value gap and displacing below. This is a very nice order flow being created. So fair value gap being respected, displacing below. What do we see here? Another fair value gap. I did not mark it, but there was another fair value gap immediately after creating the first fair value gap. What did I say about this case? This is a high probability case when we have a fair value gap being respected, displacing below with a fair value gap. The second fair value gap is a high probability one. You can see that price is respected here. Price started going lower. We had a sweep here, a small one, a small sweep because there's no fair value gap here. So price could not displace below, take a high, started going lower. There's no fair value gap here, but there is one here. What happened is this. Price went lower. There was a sweep here. So for now, this is a bearish order flow. It's a clear one. I'm going to go short until there is a change in the direction. Where does the change in the direction happen? Price went lower, created this low, went up, taking the low here, and big displacement going up above the high. So there is a change of character, over structure or displacement over structure, and leaving a fair value gap here. What happened is price was going up, going up, going up, and it was respecting the bearish fair value gap. So far, I'd be like, okay, maybe we're just going down. We're continuing to go on the downside. However, price simply went lower, did not go to the fair value gap, created this low. This low was taken inside of the fair value gap. So this is a high probability setup to go up. Price did not displace above a lot, taking the low again. So this is the short-term low, taken inside of a fair value gap as we discussed. Price then pushing up. This is a higher probability one. What do we have here? So we have a fair value gap and a breaker block. That's where we can enter from. That's where price comes to 50% of the breaker block, comes here, started going up, pushing up. What do you see here in this bullish order flow? Now the order flow is starting to be bullish. So first of all, we had a lot of sweeps to the downside. Another thing is a breaker structure here. Third thing is price respecting the first bullish PD array, which is the fair value gap, going up. And last thing is price respecting this bullish PD array right here, which is the breaker block. We can see that there is a sweep into that bullish PD array, which is the breaker block, and the price pushing higher. And you can see while price is pushing higher, this fair value gap is being respected. Price going up. This fair value gap, clear one, is being respected. This is almost being respected, and price pushing up. Price again came into the bullish breaker block. This level right here and this level right here are the two last lines of defense, which means that if this one is being disrespected, I would be like 50% into going bearish. And then if this one is disrespected, I'd be almost 100% sure that price can just keep going lower. This one is respected, price creating another fair value gap right here. And we can see that after some time, price is respecting the fair value gap with a sweep. So sweeping the short-term low into the fair value gap, pushing higher. That's a high probability setup right here. Last example right here, and this is also the 1 hour of NASDAQ. So price was going lower, decided to take a short-term high, which are those highs, only with a wick right here, and then displacing below. We have a big fair value gap. Do we take this whole fair value gap? No. We can actually focus on the fair value gap and the breaker block overlapping with each other. So breaker block and a fair value gap, those overlapping with each other, we can see that there is also a liquidity below this zone, which means that a sweep of those highs or inducement into the zone that I marked here is the high probability one. And that's what happened. Price simply goes there, sweeping the levels almost with a wick into the breaker block and fair value gap and going lower with displacement. What do we see here? Another fair value gap and an order block. Now you can also go with the fair value gap here or go with the order block. But since this is a big fair value gap and the breaker block is right here, this is not even on the premium. So I would take the order block right here. We can see the same thing happen here. Price simply come to the order block and there is a sweep inside of the order block or the 50% of the order block, and the price keep going lower. There is no fair value gap here. Price displaces below, could not displace below this point. You see, it's only with a wick. However, price decided to go up, sweeping again inside of the order block, which is almost the last line of defense, and then going lower, creating a fair value gap. And this fair value gap is respected here, going lower. Another fair value gap here is being respected, going lower, no fair value gaps here. And then we have the breaker structure here, the price going lower. Now we have the range. You can also apply the premium and discount. We have this high and this low. Price simply retraces not to the 50% here, went lower, but then took those highs and this high slightly above the 50% and continue going lower. Now we have another fair value gap here that in the future I would be expecting to be respected to continue to the lower side. That's how we look at it. Now, why did I ignore this fair value gap? Because we look from here to here. This is a fair value gap on the middle. What I'll be considering the most is a fair value gap that is extreme. That's what we always do. You see right here, this is an extreme fair value gap with a breaker block. I'll be considering this. This is an extreme order block. I'll be considering this and also this fair value gap. This is an extreme fair value gap. I'll be focusing on this. I'm not going to be focusing on fair value gaps on the middle of the range. Those can be disrespected. Why? Because we can go to the higher time frame and we can see that this one does not exist. There is another one that is all the way above or all the way below. Hopefully this video helped you to understand the order flow in a better way. If you guys want access to this presentation right here, I'll be posting it on the Discord. Make sure to join the Discord. It's totally free. I'll be sharing this as well as other examples. And if you have any questions, you can also ask there. I always be helping people there all the time, answering people's question, everything. If you guys feel like this video was helpful, then make sure to hit the like button, subscribe to the channel, leave a comment, a nice comment just to say, oh, thank you, because I put a lot of effort into this video. I'll see you in the next video.